were in uptrends, and they sustained quite well for some time, but now have given in. Even Bata has broken a long-term trend line support, around the 1500 odd levels. I believe Bata is likely to come down further. You can keep a stop loss of 1380 for your shorts, and make targets for around 1280, 1250 odd.
Okay, Kunal, care to comment on some of those PSU stocks that have been battered out of shape?
So yeah, I think the selling gets more aggravated into the PSU pack, and not just the PSU bank, but I think the individual PSU stocks as well. The likes of ONGC, I think NMDC, and many of these other stocks, Coal India, NTPC. Many of these stocks are at their 10-year lows, and some of them are just about making all-time lows as well. So I think it's just about the pain which was seen in this sector. I think it's getting more aggravated, and I believe that that's the likely texture of the markets. The ones which have been very weak in terms of sectors or stocks, they're the ones which are continuously seeing some additional shorts and stocks going down, and the ones where there was some sort of hope, etc., built up, like the likes of OMC stocks, I think HPCL, BPCL, they're relatively stable in current market scenario. So I think that's a good positive. Now, two of the other points which I would want to highlight, other than the PSU pack, one of them is that the India VIX, however we keep on discussing about this particular index, is at 58.5 odd levels, but the RSI on the India VIX on the daily charts is at 93.94. These are extremely elevated levels for any kind of asset class, whether it's the index or whether it's the volatility index in that regard. So I believe that generally results into a retracement of sorts, which could happen for the next couple of days. So I strongly believe that over the next 3 to 4 trading sessions, so 1 week approximately, the volatility index should start abating or receding significantly, and think that's the first sign. And the second, I think on Friday we saw open interest reducing for Nifty and Bank Nifty futures for the current month series, and I believe that's the likely texture. Then over the next couple of days, the shorts would try to get to try and close their positions or unwind their positions. And I think if that happens, both on the back of India VIX, which could recede from here on, as well as the shorts trying to unwind positions, that itself could lend a lot of stability. So I think rather than panicking over here, a short-term trader should just try and wait for opportune time. I think the moment the volatility settles down, I think there could be chance of a very sharp recovery on the indices.
All right, Liz, hopes that we will see, this crazy havoc day after day finally abating at some point in time. So perhaps take opportunity while you can at a time like this. That's the advice. But today there was SBI Card's much sought after IPO, and there was a listing. Of course, it was no blockbuster, unexpected lines, but we caught up with the management and the bankers to the issue after the listing. Let's hear out what exactly they had to say, currently quoting at 693.
We are quite elated, first of all, with the listing, which is very, very important for us that we would list. Nobody can actually take care of the nature's forces, and obviously the nature's forces have played quite amount of subdued environment across the globe in terms of all the indexes. In India also you are feeling it, but I think more importantly, the markets will always take care of those companies which are strong, which have strong fundamentals, have a corporate governance strategy, and which actually always have sustained performance. I think we are one company which has been very, very sustained in terms of our ROA, in ROE, in terms of revenue, in terms of our growth. I think if you're going forward, these minor blips of the market will be overcome, and the company's strength will come to the fore, and we should see a strong rebound as we go forward.
All right. And that, as everyone knows, the company has had a very strong track record of growth and profitability. The most encouraging aspect, I would say, was it was seen as a play on the consumption theme, a clear proxy on the consumption theme, and that's what resonated with most institutional investors, most retail and HNI investors, and that's the reason you saw the second largest ever subscription for an Indian IPO of about 2 lakh crores. So if you ask me, despite the soft listing, we are very, very confident that the strong fundamentals, the play on the consumption theme, as well as the digitization where SBI Cards has done a phenomenal job, these will eventually play out, and you will see the fundamental value really play out in the next few days?
I think when we started the process, we were very clear that we are bringing an opportunity which the investors have never seen. This is the first pure play credit card company, and across the world we spoke to investors. There was mad rush to get a pie of this stock because no other company which is in this space is expected to come to markets. So to that extent, the conversation was slightly simpler. What was difficult for us is to manage expectations when the investor allocation had to be done. So actually the demand was mad, and as you can see in these difficult market conditions, when we are having trading halts and lower circuits, the issue is sailing through with flying colors.
It is actually seen as a very high ROE company. It's a sort of play on consumption. It is growing extremely strongly. Typically in kind of challenges we are seeing right now globally, you will be worried about companies which will be impacted by, let's say, leverage challenges. But here you have a company which essentially is, I guess, has got a long runway to growth. Cycles might happen, but I think here actually in the cycle probably will be also, slight dip in growth, will be growing nonetheless quite strongly. And I think the profitability profile is fantastic. So I think people are just hankering for that because you are getting very, very long runway to growth with a very strong management, with a very strong profitability, with a great pedigree and distribution. I mean, that's why I think people are sort of rushing even in tough market conditions.
All other banks coming together, it is not guided by the return on capital principle or investment. This is all guided by providing the stability to the financial system.
That's a slew of market experts talking about what they feel of the current market environment. No signs or respite really from this fall, just that wee bit blip up coming in. 747 points lower, still 7.5% down for the Nifty futures as we speak. Names like RBL, IndusInd, Bandhan are getting pounded and hammered. And within the Nifty as well, you are seeing acute pressure on the blue chips right now. It's a little surprising, Nikunj, as to how most fund managers are still saying that they're not really seeing redemption pressure. Do you think that's going to be the next leg? Or do you think we'll have a more sound retail investor this time around who wouldn't be tempted to pull out and save at least that much cash that they may still be sitting on?
I hope not. Because, if you have a double whammy where both FIs are selling and domestic guys are selling, then trust me, there's no buyer in the market. You don't want that situation because that's going to lead to a massacre. I mean, I don't know how to describe the market beyond that. But yeah, that's like the worst and the worst nightmare coming true. But you cannot rule that out, Aisha, and I'll tell you why. I mean, even though I'm a die-optimistic, I'm also a big, follower of human behavior. When you start losing money, nobody likes losses. And frankly, with all the great, storytelling which we've got from some of the best guys about earnings recovery, that's not happened. This market was rising because of liquidity. We managed to navigate a 2019 stock market economic slowdown, and Nifty closed in the green. The collateral damage was only restricted to small and mid-cap stocks which had different factors. So every fund manager in a sense was able to hide in these 10-15 stocks, the Reliance, the TCS, the Infosys, and perhaps the DMart of the world. They've also started correcting. Reliance is now threatening to go below 10,000, is threatening to go below 1,050. TCS has reversed completely. When these large funds, they started losing money, and then suddenly you get your income statement in your hand which says that, look, if I bought into real estate, forget about making money, I've not lost money. What is better in this, losing money or not losing money? So these are the questions which will elementary start disturbing you. I don't think we are there yet, because of media, education, understanding, digital awareness, the whole SIP culture. I think it's going to keep us protected. But if this carnage continues, trust me, it's a matter of time that this will start also impacting the retail sentiment. And sentiment is a dangerous thing. When the retail guys got out in 2009 and 2010, it took them 4 to 5 years before they came back. So I really hope and pray that for the sake of everyone in the market that we are not there yet, because a market meltdown coming because of selling by local investors is going to be the most dangerous thing to be in. But yeah, you never know. I mean, I never thought 10 days ago that we would see a carnage like this at a time when Fed is cutting rates, but it's happening. Since the reset button has come, the world is taking a different shape. You don't know what the new avatar would be. This shall pass away, but before this dark dawn will pass away, it is important to understand it's going to be painful, it's going to be excruciating, it's going to be testing nerves, and it's going to be testing a lot of risk risk appetite, so to speak.
Yeah, absolutely. And that's the unfortunate bit that while the FIIs may return tomorrow or whenever they feel the bottom is, retail is going to take a long time to come back with their burnt fingers. And that's exactly what played out in 2008 as well. But before I take it across to Anand Tandon, who just joins in on the show, Kunal, to you, because you monitor the charts of gold as well. Is it as vicious over there too? Is the capital protection mode prevalent even when it comes to gold? Because it did hit that top, and since then you've seen some pressure come in on gold as well.
Yes, absolutely, Aisha, and I think that's the concern, or I would say worry for the markets, because generally when you see risk off as a sentiment or as a prevailing strategy, you generally expect gold to do extremely well. But the fact that gold had already run up, I think in the last 1 year, from $1,050, $1,070 to almost 1,700, which it tested I think few weeks back, the reason and I think that's one of the reasons why I believe that now gold is seeing a lot of profit booking. Now when I was looking at the charts for gold on the longer term projections, it indicates that at 1700 levels, it's come back to hitting many of the Fibonacci series resistances, and I'm talking of, those long-term charts for gold, and that generally indicates that there could be a retracement of at least 20% from those highs of 1700 for gold. So I think somewhere closer to 1400-ish is where I believe that there could be some semblance of stability which could come back into the gold, and I'm talking of the US dollar prices. So maybe another 100-120 rupees correction from $20 correction on gold prices could not be ruled out, because this is not just one-way strategy that yes, it's risk off which is going on. It's I think money being taken off the table wherever profits were being made, or in asset classes. I think that is where you're seeing a lot of profit booking and correction happening.
Anand Tandon also joins us. Okay, Anand, how are you holding your breath and your nerves in this market?
Well, having seen it several times in the past, it is not surprising that when something like this happens. Just that this one has been a rather extended rally. Typically we've used to a cycle of about 8 years in the last 2 decades or so. This one has lasted significantly longer, and therefore has kind of deceived a player like us. But otherwise, a correction like this comes reasonably frequently, especially when markets are grossly overvalued.
But surely, Anand, this kind of grave sell-off day after day that we're seeing, and the kind of rates that we're seeing on the screen, has that not come as a surprise to you, especially the fact that there's so much uncertainty and one really can't even take a guess and venture the bottom?
First of all, in almost any correction, it is difficult to either estimate how long it will take or how far it will go. If you were to look at the history, the last 3 major corrections that I have witnessed, 92, 2000 and 2008, in each one of them the index actually more than halved. So it is not that we haven't seen this kind of thing before. Now you could argue that there were different reasons for each one of them, and obviously the reason is always apparent in hindsight. It's very difficult to figure out upfront, otherwise we would all be billionaires. But the reality is that it is not something which is unique. What this more than 50% correction, by the way, is not a hallmark of the Indian market. It is true even in the mother market of the US. So every time a serious correction like this happens, the index more than halves. It's just that people tend to forget because these things come after a long period of time. As I said, I've been hearing arguments that, forget the PE, on price to book, this market is cheaper than it was in 2008. I'd like to point out a logical fallacy there. In the decade running up to 2008, the ROEs of stocks were at least twice what they are today. So actually speaking, if the ROEs have halved, there is no reason why price to book should also not be halved. And by that logic, it is fully priced and still expensive. So, it is not as if we are in a unique position. We've seen it before. It is always a surprise when you are upon it at the speed at which it falls. And as I said, it's difficult to kind of game as to how far it will fall. But falls like this do happen. That's why there is risk in the market. And I think it is important that people are reminded of it every now and then.
Yep, and what a rude reminder this is turning out to be. At 9,096, we're back to those lows, back to testing that 9,000 mark, just about managing to defend that, 790 points lower. And 8% is the cut that you're seeing on the Nifty. I don't even want to get to the broader markets because the cuts there are way deeper and sharper. Bandhan Bank, L&T Finance, Piramal Enterprises, RBL down 23%. Shree Cement, PVR falls a little more. Balkrishna Industries is getting hammered. From the word go today, 11.5% cut there as well. And all sectors are pointing towards a red. Real estate getting knocked down, textiles getting knocked down, finance, banks, automobiles. There's nothing in the green as we speak right now. And you know, Anand, I was just talking to Nikunj as well just a short while back. That the next leg perhaps, and I hope not, is going to be retail actually redeeming out. And once retail gets out of the market, it's very difficult for that sentiment to change. It could take months, it could take years for retail to come back and participate the way they have been in the last 2 years.
Well, that is true. There is no doubt that the retail market does tend to react a little late. But I think this time the behavior has been significantly different from what we've seen in the past. There has been no hurry to exit. The SIPs have consistently remained at the same level as they have been for several quarters now. And I think the distributors of mutual funds have done a reasonable job of ensuring that people have bought the SIP argument that you should be invested in it irrespective of what it is. Now, whether that kind of sanguine situation will last if the market were to continue to fall further from here, only time will say. But I do believe that given the fact that this is a mantra which has been put into people's heads for quite a while, and the fact that somebody who started an SIP, let's say 2 years ago, has been in the negative for the last 1 year and has still not stopped. So it does appear that it's a habit which seems to have caught on, and therefore we may not see the same kind of reversal that we used to see in the past.
That has seen a massive recovery, and that's PVR flashing on your screens. 1048 is where the stock started off at. It was nothing but selling pressure because everyone's talking about how most of the theatres are closed, although there was a new one that has been opened for PVR, and how sentiment has been hit due to all of the curbs and restrictions that have been imposed across the country. But that's the stock price for you at 1473 now. That's a massive 168 rupee notch up in the current trading session. So that certainly is some sort of a U-turn that you're seeing in the stock price of PVR. Interesting really to monitor some of those rates. But remember, the rest of the market is in the throes of the red, 91.94 now. In fact, it would be interesting to find out what exactly the sentiment is and what the dealing rooms are really talking about at a time when the sell-off has only intensified. Jayesh?
Aman, the mood at the dealing rooms is quite somber because what is on the top of everyone's mind is the coronavirus spread update, so to speak, because there have been many cities which have gone into partial lockdown mode, which also means that, there are a lot of consumption activities which have been restricted. That's the reason we are seeing some of these consumption stocks take a negative hit as well because of the closure of the malls as well as some of the eateries as well. What actually the market is closely watching out for right now is some kind of announcement from the RBI, which of course at 4 p.m. there is a presser that is scheduled. So, keenly watching out for any positive surprise that comes from the RBI. But, the sentiment is such that whenever we see such a big fall, the low of that day is generally tested. So most of the dealers that I'm speaking with, they are anticipating that going forward in the next couple of weeks or something, you will actually test Friday's low, which will be a rude shock for anyone who would have created fresh positions on Friday itself, because 8,500 is still about 500 to 600 points away, and we've already seen an 800 point fall today as well. There are usual suspects that are taking it on the chin. There is liquidation that we have seen in RBL Bank, in IndusInd Bank, as well as some of the other names like Piramal and Indiabulls Housing Finance. PVR, just focusing on that, you were mentioning before some time back as well, there has been some smart accumulation that has happened in the stock at lower levels. So, we are seeing the stock currently up more than 10%.
For giving us that heads up as to what exactly the dealing room chatter is. Kunal, the curious case of PVR today, just to talk about what's happening with the futures and the massive recovery that the stock has staged?
Yeah, I think there's almost a 200 or a 250 point discount to the current month futures for PVR, and that's amounting to almost 20 to 25%, and that's, I've never seen that happening for stock like PVR, which was an actively traded stock since the last few weeks and months. So I think it comes as a bit of a surprise, and that generally happens when there is some sort of, maybe I'm expecting or maybe speculating that there could be some sort of an error which could have happened into trading on both the cash and futures side for PVR. Maybe the cash orders would have probably cleaned the book, and which is why you're seeing the rally happening only in the cash segment, and the futures is just about staying put at 1160, 1175 levels. So I think that could probably be one of the reasons why I believe. But such kind of a massive aberration in terms of the discount of current month futures, 20-25%, and that to 1 week to the expiry, I think generally arbitrages or reverse arbitrages, they generally take note of such kind of a scenario.
Okay, yes, indeed. We will be just, digging a little bit deeper and finding out what exactly is the reason behind that massive surge in PVR. But in the meantime, wanted to get in a take as well from you, Kunal, as to what the take is within the banks, how you're looking at the Nifty Bank Index move with names like Yes Bank. That's the only one, of course, that seems to be bucking the trend, because names like RBL, etc., Bandhan Bank are seeing double-digit cuts.
So yeah, I think other than Yes Bank, there is no other banks which have really lent support. In fact, I think the worry today for markets is not just the selling, but I think it's the selling in those predominant large cap banking names. So whether it's the likes of IndusInd Bank, ICICI Bank also was down, I think 8 or 9%. The last I had seen it had gone to a shade below that 400 mark as well on intraday basis. RBL Bank, seeing that those levels of 170, I don't remember last time the stock was at such kind of level. So the punishment which these banking stocks are getting, I think just about indicates, and those large cap names, I think indicates that there is more of a institutional based selling which is happening into these counters, and generally that kind of a scenario is where the Bank Nifty also gets a lot of resistance. So we may not have breached those index levels what we hit I think on Friday in terms of Nifty or Bank Nifty, but the way the stocks are seeing some selling pressure just about indicates that this is more of institutional selling or the selling from larger hands, I think, which is why these stocks continue to see some selling, those kind of pressures. Now, what could turn, the tide for many of these stocks is stability, and I think that's going to be the first port of call, because you may not see the likes of ICICI Bank or IndusInd Bank or many of these stocks going through a big round of short covering on the first go, but there has to be first signs of stability, and then post the stability of maybe a couple of trading sessions is where shorts would try to cover their position. So I think the next 2 days would be very critical for the markets, because if there is any sort of stability, the index stabilizes at 9,200 levels approximately and 23,000 on the Bank Nifty, then I believe that maybe the round of short covering would begin pretty soon.
Okay, that's the view coming in on the financials. Let's sum it up then. It's turned out to be yet another manic Monday after the kind of rout that we witnessed in the global markets. We too have fallen prey to that, and we've ended very deep in the red. 750 point gash by the time we sum up to 9,200 levels. For the Sensex at 2,700 point gash at 31,411. The broader end of the market too has seen no respite whatsoever. And take a look at the kind of rout that you've seen across sectors. I mean, the sector that's been the least affected is pharma, and that's seen a 4% gash. So metals have led the rout with a 9% cut. You've got the Nifty Bank 2,000 points, 2,084 points down. IT, infrastructure, energy, auto, PSU banks, you name it, nothing has been spared the carnage. 49 out of 50 stocks in the red. The cuts coming in as steep as nearly 20% for IndusInd Bank. Of course, those metal names knocked out of shape. So JSW, Tata Steel, Vedanta down and out, Adani Ports, and a lot of those marquee frontline banks. So Axis Bank, ICICI Bank, HDFC in the red. ITC, Infratel, ONGC, Reliance Industries, Tata Motors, M&M. It's an exhaustive list, with Yes Bank being your sole gainer. Within the broader markets as well, the picture is absolutely no different. You've got RBL Bank at the top of the heap, and the cut is as severe as nearly 22%. Future Lifestyle, Prestige Estates, Strides Pharma, Piramal, L&T Finance, JSW Steel, Tata Motors DVR, Bombay Dyeing, RCF, the likes of Polycab, IDFC First Bank, Birla Soft have all been bruised out of shape. There's India Cement, Central Bank that have bucked the trend. Avanti Feeds holds out. You've got Dish TV showing you a flicker of green. Something like Jamna Auto, HPCL, Motherson Sumi, as well as Bank of Maharashtra, Glenmark and PNB Housing. Those are some of the stocks that are showing you a bit of green in today's trading session. We'll closely await what the FII and DII figure is by the time we wrap up, as well as the overall turnover. But no doubt that greed and fear index is moving increasingly towards the sign of extreme fear and fear. Anand, we've wrapped up today's trading session, but if at all you do believe that there is some sort of an opportunity for investors at a time like this to perhaps, if not go all in, nibble into the markets, where is it that you would see this opportunity? Could be sectors or even some stocks?
Well, first of all, there are always opportunities, and even for a mutual fund like investor, I think you should look at a fall like a 7% to at least put in 10-15% of your asset allocation of equity into the market at every such fall. Even if you assume that the market continues to fall for a long time, an 8% fall cannot be replicated day after day. You will be averaging downwards and making a reasonably good entry point. Coming back to a sector allocation, I think the only thing that I'm willing to take a bet on, and that also is based on history, is simply that whatever the sectors that took the market up will not be the sectors that will perform from here. So therefore, I'm willing to stick my neck out and say no to NBFCs and largely no to most consumer stocks. They are overpriced, they are overowned, and they are the ones that will be sold in any rally. Therefore, if you're really looking for those which are likely to turn around, you have to look at those stocks which are reasonably performing well, but which are below the radar, which are sectors which are largely unloved, and where people don't want to look at them because they have relatively underperformed, and therefore they are now quoted in the so-called value range. I think the one area that I find myself reasonably convinced about is, for example, energy, and more power than oil and gas. But even within gas, for example, gas distribution companies, in electricity, the distribution companies,
Anand, I'm going to have to cut you short there. The Reserve Bank, and it's breaking now, they have said, according to agencies, they have constituted a quick response team. That is something that they're looking to do. They have also asked banks to take stock of their business continuity plan. So remember, at a time like this, a lot of urgent measures, a lot's being looked upon from the Reserve Bank. We were looking at maybe a lower interest rate scenario as well, though one really wonders how much that would really assuage concerns given the kind of panic selling that you're seeing in full force. Details are slowly emerging. Banks should take immediate measures in order to manage their risks. Methali Bushnarmath now joining in. Methali, the Reserve Bank urging banks to take stock of their business continuity plan and immediate measures in order to manage risk. Perhaps at a time like this, it is the need of the hour?
Well, I think that would be, in fact, stating the obvious, because banks are in the business of, lending, taking risks, and it's all about the business of trust and ensuring that the depositors' money is safe. So I think the fact that the Reserve Bank has set up a quick response team, perhaps that makes more sense, because then banks will have, somebody to refer to in terms of, in case there are any quick decisions to be taken. But as far as telling banks to take action and to take cognizance of the risk, that I think would be stating the obvious. Banks would anyway be more concerned than, frankly, even the regulator about ensuring that their business is safe. So we'll have to wait and see what the governor says at 4 o'clock, because as we've seen, In the case of the Fed, even the dramatic action has not really helped. Europe is open with all the industries tanking. And so I think these are difficult times, and I doubt if central bank action alone can do very much. But to the extent that it comes, at least it reassures the public that, well, there is somebody doing something. So perhaps it's more that. We'll have to wait and see what he does. Maybe some kind of forbearance, regulatory forbearance, maybe greater assurance of liquidity support. But as we've seen, there is no dearth of liquidity in the market. So we'll have to wait and watch and see what exactly the governor has up his sleeve.
Yeah, Maithili, though my only, sort of confusion and question here is it coming from the shadows of PMC and then most recently Yes Bank, or is it RBI anticipating that there are going to be bigger problems in the financial system?
No, clearly the distress that you're seeing is different from the earlier ones in the sense that it is emanated in the real sector. These are fears about coronavirus and the way it is spreading, because as economic activity gets hurt, and we are seeing evidence of that in India as well, you are going to see a lot of distress with more and more people, particularly daily wage earners, finding it very difficult to earn their living, and that is going to create a great deal of stress. So the question really is that what can monetary policy do for these people? Perhaps here the ball is more in the government's court, where government can perhaps give some kind of temporary doors or set up, even sounds very drastic when I say this, I'm in fact scared to say it, but set up something like soup kitchens. Where do people go for, to earn their bread and butter if there are no jobs, if activity is increasingly closing down? You'll find theaters, malls, hospitality, travel, all these industries, not service sectors getting hit. It is going to be very difficult at a time when manufacturing is already not doing very well, and it was only the service sector that was really keeping the economy going. So I think we're in for tough times, and the answer really perhaps does not lie in either the monetary field or perhaps even the fiscal field. It's more a question in terms of how do we overcome this major health hazard.
Very much, Maithili, and of course we will connect with